Now the next thing also uses speed again. Now this is a much better example of how important that speed is. Now this, of course, here we saw gold testing its lows. Okay, so you've got your slower time frame in the upper left-hand corner, right here. Gold testing its lows. Now, as you guys know, at the low of day, we're always expecting to see what? The two-step pattern long. In fact, the two trades we took today, which were both winners, were both two-step reversals off the low of day. Well, at the low of day, we're looking for a two-step long. Back over to the fast time frame here. We mark up our swing high, looking for a reversal off this low of day, back to the upside here. Now, that two-step pattern long is a very high percentage trade, but we still have to be careful now, and here's why. The low of the day here on gold was a double bottom. A double bottom, we mark up those blue lines there. That blue line marks a double bottom. That means we want to be extra careful around that level here. What we look at, though, is while we're waiting for price to break above that swing high, we see momentum curl over and point down. But the big picture was the speed here. Notice how the speed kept dropping as price was trying to rise. See that? On the fast time frame here, on the right side of the screen here, you'll notice we had falling speed of the tape and price is trying to rise. Now, we talked about it before, right? If I see falling speed and rising price, what do we think is going to happen? Reversal. Okay, so we also did not see any real consistency for the big buyers either. And because we were at that double bottom, we knew we had to stay away. Now, if you fast forward this a little bit, guys, what happened was it ended up tumbling even further because we knew with the decreasing speed, trying to go long, it was clearly showing us the sentiment here was still to the downside. So we avoided the long trade. We, of course, avoided a loss, and this price tumbled to the downside, breaking those lows below 38 even. Another example of how we use the speed of the tape, the pace of the tape indicator, to make sure that we identify market sentiment. And that sentiment will then help us choose which trades to take and which trades to avoid. Guys, remember, you can always email us if you have any more questions about how the pace of tape indicator works or about sentiment. Head to the blog. Now here's another example of how we use speed, right? 3 good examples here today of how we can use speed to make better educated decisions. Now this is one that really proved our point here. Now in this case, we're watching a wave pattern to the short side. Okay, looking for a wave short. Now follow me up top here, right? Up top here, there's my slower time frame. Okay, so when I zoom in here, you can see on my slower time frame, my goal was to get into this trade short 82.30. Okay, off the wave indicator. 82.30 going short. Now, everything looked fine, but watch the speed of the tape and watch what it tells us while it's retracing off these lows. Remember, guys, the wave short is going to come down, then retrace off those lows, and then we're going to short it at the trigger line. Well, while it's retracing off those lows, if we see rising speed, we want to be very careful because it's probably going to end up blowing right through that trigger line, and instead of only being a retracement, it's a full-blown reversal. We saw this one coming, didn't we, guys? Now, I use the fast time frame here as an illustration. Look at the fast time frame. Notice how we hit the lows here at 10:33 and at 10:41. Now, remember, what am I looking for? On the wave indicator for a wave short, I do not want to see the speed rising as I retrace off the lows, right? Because if speed rises while price is rising, that confirms the sentiment here is now to the upside. So if speed rises while price rises, I'm looking to go short. That tells me no, 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 no. Stay away from the short sides. And you can see here on the pace of a tape indicator, lower left-hand corner. Look at this, 10:33, rising speed. 10:41, rising speed. As we break through and test the trigger zone, rising speed. Okay, and you can see that on the fast time frame. You can see 10:33, 10:41, we tested those lows and we began to rise. When we rose, right, when the price began to climb, the speed began to climb. And that told me be very careful because the buyers clearly have control. And you can see what happens, guys, in the upper left-hand corner here on the slower time frame. What happens? It blows right through our trigger line at 82.30. I was trying to go short there. That didn't happen. It blew right through it. We, of course, were not in the trade. We were sitting on the sidelines because we knew exactly what was going on here. The buyers had taken over control. We were nowhere to be found in that trade, guys, because we wanted to keep that money in our bank account. Okay, so good example here. The third example here today, probably the best one, of how we can use speed to identify market sentiment. All right, enough learning here. Let's talk about the trades we took today. We took 2 trades today. Okay, we had a little bit of a difficulty seeing patterns fully line up, even though we had some pretty good price action. We also had to, of course, remember we were coming off a losing day yesterday, so we wanted to make sure we really took the time we needed to get our confidence back and make sure we're making the right decisions here. First trade 903 here on the gold. This was the first trade of the day here at 903 on the gold. You can see we have the short-term trend down. Right, short-term trend down. I'm going to bounce off the low of day here. Right, that low of day is acting as support. Remember, guys, we talked earlier about how that high percentage trade is taking that two-step long off the low of day. We did that twice today. Now, if you got in late, you made the better move here. You see this big move going up here at 903, a two-step long at 1140 even. We got our +4, move our stop to entry. We got filled at +4 again for our second target, and then flattened at +4 as well. 2 off at 4 is 8, 12, right? And then you got 16. So 16 total ticks there, guys, for that two-step pattern long. A reversal trade. And again, like I said, if you got in late to that one, you actually made more money than those guys who got in early on this one, because the trade whipped around on us, stopped us out, and then continued back to the upside. Okay, so if you were late a little bit there, no big deal, right? Made some more money there. Next up here, so we took 16 ticks out of the market the first trade today at 9 o'clock, and then 30 minutes later, we had almost the exact same pattern. See that, guys? I'll bet you can barely even tell the difference. These are a different pattern, obviously, but the exact same, right? Different time of day, exact same pattern. Short-term trend down. Here's my low of day. So, of course, we're looking for the bounce off that low of day. We mark up our swing high. The break above that swing high. Make sure you guys get, right? Make sure you guys get above that trigger line here. And at 937, right? 937 here, we took this two-step pattern long. 34.6 was the time. I'm sorry, was the fill. 937 was the entry. We took our +5, move our stop to entry +1, got stop to entry +1. That's a total of +12 ticks, or 120 USD. So a good morning here, especially considering the obstacles we had to overcome from yesterday. We got back on the horse. We stayed confident in our trading. We watched carefully to make sure the sentiment was in control. We knew exactly what we're looking for today. And guys, we didn't get overwhelmed with emotion, right? We didn't want to get in today and let those emotions from yesterday bleed over into today. Follow those rules. A great example of how, guys, if you stick to those rules, you keep trading, guys, you will do very well with the system. Let's prep for tomorrow. Friday, April 23rd, 2010. Finally, Friday. We got 8:30 durable goods orders, 10 o'clock new home sales, 11:30 our tips and tricks. And don't forget tomorrow, tips and tricks, Monday, Wednesday, and Friday. We'll be talking specifically tomorrow about how to use slower time frames for more precise entries. How does that work? Slower time frame, more precise entries? You guys come out and join us tomorrow for that. 11:30, we'll do that tomorrow. Trade room opens up tomorrow at 7:45 a.m. If you're here for the first time tomorrow, guys, don't forget, contact sales@schooloftrade.com if you need help. They're also on Skype. The beginner's course, we have 3 courses. The beginner's course is developed for new traders. It goes over our routine, the markets we trade, different contract specifications, obviously the indicators we use, the patterns we use, the rules we use. The beginner's course is perfect for a brand new trader. And guys, tomorrow's a Friday, so no webinar tomorrow. Webinars on Tuesdays and Thursdays. We're doing tips and tricks tomorrow, and we'll open that trade room up tomorrow at 7:45 a.m. So 7:45 a.m. We'll see you guys then. Tomorrow's a Friday. We'll finish up a good week. My name is Joseph James. Hope the video helps. See you guys then. Bye-bye for now.